$77.80. That is how high silver shot up in a single day. 24 hours earlier, it was sitting at around $71. Now here's the part that should make you stop scrolling. That wasn't random. That wasn't luck. That wasn't some Wall Street insider tip. That move happened because of a phone call, a diplomatic agreement, between two countries that have been on the brink of a full-scale war. And if you don't understand why silver moved like that, you are going to be completely blindsided the next time it happens. By the end of this video, you're going to understand the silver market better than 95% of the people investing in it. We're going to cover what actually caused this 6 to 8% single-day silver spike, why peace news made silver go up, which sounds backwards, and I'm going to explain it, how silver compares to gold right now, and what the ratio is telling us, what platinum is doing, and why it matters, and the price forecast for the next week and beyond. This is not a get-rich-quick video. This is a breakdown, a real one. Stick with me. Silver Breakdown 2026, what's really going on? Who is this video for? Before we dive in, quick note. Before we dive in, nothing in this video is personal financial advice. I'm here to break down what's happening, what analysts are saying, and what tools you have available. Always do your own research and speak with a qualified advisor before making any investment decisions. If you've never traded silver before, or you're brand new to commodities, precious metals, or financial markets in general, perfect. This video was built for you. I'm going to explain every single concept from the ground up. No jargon left unexplained. No assumptions that you already know what COMEX means or what a futures contract is. But here's the thing, even if you are experienced, stay with me. Because the dynamics at play right now in the silver market are genuinely unusual, and understanding the why behind these price movements is valuable at any level. So whether you're watching this because you've got money in silver already, or you're just curious about what on earth is happening in commodity markets, you're in the right place. Let's start with the basics. What makes silver different? Silver is not like other investments. And I want to be very clear about this from the beginning, because misunderstanding this is why most people get caught off guard when silver moves. Here's what I mean. When most people think about gold and silver, they think, oh, these are safe haven assets. When the world gets scary, people buy them. And that's kind of true, but for silver, it's only half the story. See, silver has what traders call a dual personality. Roughly 50 to 60% of silver demand comes from industry. Solar panels. Silver is a key conductive material in photovoltaic cells. Electric vehicles. Silver is used in battery management systems, charging contacts, sensors. Consumer electronics. Your phone, your laptop, your TV. Medical devices. AI data centers, which are consuming silver in growing amounts. The other 40 to 50% is investment and safe haven demand. That's the scary world, buy silver crowd. Now here's why this matters, and I want you to really lock this in because it explains everything we're going to talk about today. These two sides of silver demand respond to opposite conditions. The industrial side loves low oil prices, strong global economy, peace and stability, manufacturing growth. The safe haven side loves geopolitical chaos, high inflation, economic uncertainty. So what happens when the world goes from chaos to peace? Both things happen at once, and silver has to figure out which force is stronger. That's the tension at the heart of everything we're discussing today. The war that crushed silver. Okay, let's set the scene. Starting in late February 2026, US-Iran tensions escalated into direct military conflict. And I want to be clear, I'm not going to get into the geopolitics of who's right or wrong here. This is a finance channel. We're looking at the market impact. What mattered to silver traders was this: the Strait of Hormuz. For those who don't know, the Strait of Hormuz is a narrow waterway between Iran and the Arabian Peninsula. And here's why it's one of the most important pieces of real estate on the entire planet. About 20% of all the world's oil flows through it, 1/5 of all global oil. So when Iran started threatening to close or disrupt the strait, oil prices went through the roof. We're talking oil that had briefly been below $100 per barrel, spiking dramatically. Now, why does that matter to silver? High oil prices, higher energy costs, higher inflation. The Federal Reserve is less likely to cut interest rates. Dollar strengthens. Real yields go up. Non-yielding assets like silver and gold become less attractive. Beat. And also, high energy costs hurt the manufacturers who use silver. If it costs more to run a solar panel factory, you build fewer solar panels. As energy-intensive manufacturing slows down, industrial silver demand drops. The result? From silver's January 2026 highs, where it was trading above $120 per ounce, silver had fallen dramatically. We're talking 18% or more from peak to trough. That's not a dip. That's a significant correction. And it happened primarily because of the conflict and what it was doing to energy prices, inflation expectations, and global growth sentiment. Silver wasn't broken. Its market was just reacting rationally to a very specific set of pressures. And then, April 8th happened. Because what happened next is one of the most fascinating examples of how markets work that I've seen in a long time. The ceasefire was announced. Silver exploded upward. And then, almost immediately, started falling back down. Understanding why that happened, the full cycle, is the most valuable thing in this video. We're going to get into it right now. The ceasefire that changed everything. April 8th, 2026. The announcement comes through. The United States and Iran have agreed to a 2-week ceasefire. It was brokered with Pakistani involvement, a significant diplomatic moment, and the key provision that markets cared about most: plans to reopen the Strait of Hormuz. Now remember everything I just told you about what the conflict was doing to silver. High oil, high inflation, lower manufacturing demand, lower industrial silver use. The ceasefire flipped every single one of those in a single moment. Here's what happened in the hours after the announcement. Number 1. Oil prices crashed. Not just fell, crashed. Oil dropped sharply, briefly going below $100 per barrel again. The market immediately priced in the reopening of the strait, the easing of supply disruptions, and a broader return to stability. Number 2. The US dollar weakened sharply. When geopolitical tension eases, the dollar, which had strengthened as a safe haven currency, gives back some of those gains. And here's the thing. Silver is priced in US dollars. When the dollar gets weaker, silver gets cheaper for buyers in every other currency. That increased demand immediately. Number 3. Risk-on sentiment returned. Global equity markets rallied. Investors started moving money out of purely defensive positions and into growth assets. And silver, because of its industrial exposure to solar, EVs, and electronics, silver became one of the primary beneficiaries. The result? Silver surged 5 to 8% in a single trading session. Intraday highs hit between $76.70 and $77.80 per ounce. It was the strongest single-day move for silver in weeks, and it hit 3-week highs in the process. And here's the key insight I want you to take away from this. Peace was bullish for silver, because the war had been hurting silver's biggest demand drivers. This is not backwards. This is actually perfectly logical once you understand the dual personality nature of silver demand. The industrial side of silver, 50 to 60% of the market, had been getting hammered by high energy costs and manufacturing slowdowns. The ceasefire fixed that. And yes, silver lost its safe haven premium too. But that was only 40% of the demand story. The industrial relief more than compensated. That's why silver moved harder than gold on the ceasefire news. Gold is almost purely a monetary safe haven asset. It doesn't have the industrial demand component. So gold's response to peace news was more muted, up about 2 to 3%. versus silver's 5 to 8. Pretty elegant, right? The pullback and why the market panicked. But here's where it gets really interesting, because by April 9th, the very next day, almost all of those gains had evaporated. Silver came crashing back down to the 73.50 to 74.20 range. Intraday, it had briefly touched as low as $72.93. What happened? The market started looking more closely at the ceasefire, and it didn't like what it saw. Let me walk you through the red flags that traders were watching. Red flag number 1. Iranian media was reporting that oil tanker traffic through the Strait of Hormuz had halted again. Not because of military action, but because the provisions of the ceasefire were already being disputed. Red flag number 2. A senior Iranian official claimed that 3 specific provisions of the ceasefire agreement had already been breached, within less than 24 hours of the announcement. Red flag number 3. Sporadic clashes continued in the region. Reports came in of Israeli strikes on Lebanon, a separate but connected thread of regional instability. Red flag number 4. U.S. officials, led by Vice President J.D. Vance, were heading to Islamabad, Pakistan, for talks, which is good that diplomacy is happening, but it also signals that nothing is actually locked in. You don't scramble for emergency talks when things are going smoothly. And simultaneously, the dollar started recovering. Oil prices rebounded slightly. Yields ticked higher. All of that pressure combined to push silver back down sharply. Now, and this is important for new investors especially, this kind of move is completely normal in commodity markets. When you have a major headline-driven spike, especially one this sharp, you almost always see a quick retrace as traders who bought the initial spike take profits. New information challenges the original thesis. The market searches for a more realistic fair value in the new environment. The 5 to 8% spike followed by a 1.5 to 2% pullback the next day isn't a contradiction. It's the market being efficient. The question is, where does silver go from here? Okay, we've covered what happened and why. Now I want to get into the analysis. Gold versus silver, the ratio that professional traders watch obsessively. Platinum, and the price outlook for the next week and beyond. This is the part of the video where most finance content either gets too complicated or too simple. I'm going to try to thread the needle. If you're finding value so far, this is a great time to hit the like button. It genuinely helps this kind of content reach more people who need it. All right, let's get into it. Gold versus silver, the showdown. Let's compare what happened to gold and silver across this exact same period. Here are the numbers, side by side. Gold-silver current price, April 9th, $4,711 to $4,725 ounce, $73.80 to $74.18. April 8th surge, plus 2 to 3%, plus 5 to 8%. April 9th pullback, minus 0.5 to 0.8%, minus 1.8%. April 8th high, 4,850 to 4,888, $76.78 to $77.78. Notice something? Silver moved more than twice as hard as gold in both directions. Up more, down more. This is what traders mean when they say silver has a higher beta than gold. Beta is just a measure of how much something moves relative to a benchmark. Silver is approximately 1.5 to 2 times more volatile than gold, with a very high correlation, meaning they generally move in the same direction, but silver amplifies the move. For investors, this means if you're right about the direction, silver makes you more money. If you're wrong, silver costs you more. It's a tool for conviction, not for guessing. Now let's talk about the metric that professional silver traders watch more than almost anything else. The gold-silver ratio. The gold-silver ratio explained. It answers one question. How many ounces of silver does it take to buy 1 ounce of gold? That's it. Right now, with gold at roughly $4,720 and silver at roughly $74, the ratio is about 63 to 64, meaning you'd need about 64 ounces of silver to buy 1 ounce of gold. Now here's why this matters and why traders obsess over it. The ratio isn't fixed. It moves, and it moves in patterns that are meaningful. Let me give you some historical context. Long-term average. Historically, across centuries, the ratio has averaged somewhere around 50 to 60, meaning at current levels of about 64, silver is somewhat undervalued relative to gold, or gold is somewhat overvalued relative to silver. Recent extremes. April 2025. The ratio peaked above 105 to 1. That is an extreme. Silver was enormously cheap relative to gold by historical standards. Ratios above 80 or 90 are often treated as screaming buy signals for silver. Early 2026, February. After silver gained 147% in 2025 versus gold 67%, one of silver's biggest outperformance periods in decades, the ratio compressed sharply to about 57 to 1. Silver had been doing major catch-up. Now, April 2026, we're back to about 64. Some of that catch-up has reversed. What does the current ratio tell us? It's in what I'd call the neutral to mildly bullish for silver zone. It's far from the extreme overvaluation of gold we saw at 105 last year. Silver has already been rewarded for that. But it's also not screaming that silver is at fair value relative to gold. And here's the key dynamic from the ceasefire event. When silver surged 5 to 8% on April 8th, while gold only rose 2 to 3%, the ratio compressed. It came down because silver was outperforming, and that is a classic signal of risk-on or improving growth sentiment. When investors think the economy is getting healthier and industrial demand will grow, silver outperforms gold, and the ratio falls. When fear dominates, gold outperforms. The ratio rises. Watch the ratio. It tells you what the market is thinking about growth versus fear in real time. If we see the ratio fall sustainably below 60, that would be a significant signal that silver is reclaiming its industrial demand story. If it rises back towards 75 or 80, that tells you fear is back and gold is leading again. J.P. Morgan, in their most recent research from February 2026, projects silver averaging $81 per ounce for the full year 2026. That implies continued relative strength for silver. Though, of course, no forecast is guaranteed, and we have to consider the current uncertainties. Platinum surprise. Okay, before we get to the price outlook and what you should actually be watching next week, I want to talk about platinum, because platinum is doing something interesting, and most people aren't paying attention to it. Give me 2 minutes on this. It's worth it. Platinum, the overlooked story. Platinum is often described as silver's cousin, and the ceasefire had a very similar impact on platinum as it did on silver. Here's the quick breakdown. Platinum hit around $2,020 to $2,030 per ounce on April 9th, after rising roughly 3.2% on April 8th, when the ceasefire was announced. That's a smaller percentage move than silver, and there's a reason for that. While silver gets a large chunk of its industrial demand from solar and EV batteries, platinum's biggest industrial use is automotive catalytic converters. These are devices in your car's exhaust system that reduce harmful emissions. They require platinum to work. The ceasefire boosted platinum because lower oil prices, cheaper energy, better global auto sales environment. Weaker dollar, platinum more attractive for international buyers. Risk-on sentiment, improved manufacturing and growth expectations. But platinum is pulling back on April 9th for the exact same reason silver is. Truce fragility, oil rebound, dollar strengthening. The interesting longer-term story for platinum is this. If the ceasefire holds and energy prices stay lower, cheaper manufacturing costs could accelerate automotive production globally. And that would be a significant tailwind for platinum's biggest demand driver. Analysts are already pointing to potential upside targets of $2,100 to $2,200 quickly if risk-on sentiment stabilizes. So, Keep platinum on your radar. It's moving in parallel with silver right now, and for similar structural reasons. The outlook: what happens next week? All right, this is the part you've been waiting for. What actually happens to silver next week, April 10th through the 17th? I want to be honest with you. Nobody knows for certain. Markets are probabilistic. Anyone who tells you they know exactly where silver is going is selling something. What I can do is walk you through the scenarios, the probabilities, and the key catalysts to watch. 3 scenarios for the next 7 days. Bullish scenario: the truce holds. Probability: medium. Expected price range: 74 to 78 plus. What needs to happen? The Islamabad talks between VP JD Vance and Iranian-Pakistani officials produce a positive signal. Tanker traffic through the Strait of Hormuz actually resumes. No significant new military incidents. Oil stays below $100. If this happens, silver could retest and potentially exceed the 76 to 77 highs from April 8th. Some technical analysts see a break above $76 with volume as a potential acceleration towards $78 to $80 quickly. Longer-term bulls, including scenarios from analysts at Citi and Bank of America, see 90 plus or even 100 plus later in 2026, if industrial demand comes back strong. Base case scenario: choppy, range-bound. Expected price range: 71.50 to 76.50. What happens here? Mixed signals from Islamabad talks. Ceasefire technically holds, but is fragile and contested. Oil, dollar, and yields stay in current ranges. Silver swings 2 to 4% on each new headline, but doesn't break out. This is the most likely outcome for next week, simply because the uncertainty is so high. Expect volatility. Don't expect a clear trend. Bearish scenario: the truce collapses. Probability: medium-low but non-trivial. Expected price range: $68 to $72. What triggers this? Confirmed ceasefire breach. Renewed U.S.-Iran military strikes. Strait of Hormuz disruptions resume. Oil spikes back above 105 plus. If this happens, silver could give back all of the ceasefire rally and test prior support levels around $69 to $70. Safe haven buying might put a floor in, but renewed inflation fears would pressure the industrial side. Technical levels to watch: write these down. Resistance: 74.50 to 76, the ceasefire spike zone, then 78. Support: 72 to 73, near-term floor, then 69 to 70. If silver breaks above 76 on strong volume, that's a bullish signal. If it breaks below 72, watch for an acceleration lower. Key takeaways. Okay, we've covered a lot. Let me bring it all together. Here are the 5 things I want you to remember from this video. 1. Silver has a dual personality: industrial and safe haven. Understanding which force is dominant at any given moment is the key to understanding its price movement. 2. The US-Iran ceasefire was bullish for silver because the war had been net negative for silver's biggest demand drivers: cheap energy and manufacturing growth. Peace fixed those. 3. Silver moves harder than gold in both directions. Higher beta means higher upside potential and higher downside risk. Know what you own. 4. The gold-silver ratio at about 64 is in a neutral to mildly silver bullish zone. Watch for it to move below 60 as a signal of strong silver momentum, or back towards 75 to 80 as a signal of fear returning. 5. For next week, stay nimble. This is a headline-driven market right now. The Islamabad talks and what actually happens at the Strait of Hormuz are the 2 biggest catalysts to watch. Set price alerts at $72 and $76. Those are your trigger levels. And one more thing that I think is the most important takeaway of all. The silver market right now is not random. Every move has a logic behind it. When you understand the framework, industrial versus safe haven demand, oil's role in inflation, the dollar connection, the geopolitical tension, you can stop reacting and start anticipating. That's the difference between being a passive observer and an informed participant. If you made it this far, first of all, Thank you. Genuinely. Creating this kind of content takes real time and research, and I appreciate you being here. If you found this valuable, please hit that subscribe button, because this is exactly the kind of content I'm committed to making on this channel. Real analysis, no hype, no clickbait promises, just helping you actually understand what's happening and why. Drop a comment below and tell me, are you bullish or bearish on silver for the next month? I read every comment. I'll respond to as many as I can. And if there's a topic you want me to cover, a specific commodity, a market dynamic, an explanation of some financial concept, let me know and I'll build it.